I think you said this in one interview, you don't have the baggage that any of the other banks get. You are at a point in time when technology is changing everything for us, right? Especially how we bank. And I really don't want to discount that rural India would also like to bank as conveniently as the rest of us do in urban India, as long as they have the ability to do so. So I'm wondering whether you need to be as branch heavy as today as you would have had to be, let's say, had you started 5 or 7 years ago.
Undoubtedly not.
Not, right, exactly. So I'm just, but before I get to that, so you're going to sell some infrastructure loans is one option.
Try to sell. There has to be a willing buyer.
Some will go to your IDF, NBFC, and then you will look to strike partnerships, including purchase of loan books from rural NBFC organizations in order to meet your priority sector.
And build PSL organically.
And build PSL organically. Organically is going to be the bigger challenge, isn't it? No?
Well, it's not as challenging as it seems. For fewer number of branches, we can actually penetrate rural India much more effectively today than we could have a decade ago.
You've done work on the studying of how many you need versus 5. Can you give me some idea of...
When we think about our branch build-out strategy, it's actually almost bimodal. And when I say bimodal, we see fairly aggressive branch build-out of a particular kind in deep rural India, and we see very aggressive branch rollout in the top centers. So it's not as if we are going to be ubiquitous around the country. At the top end, let's say top 30-40 centers around the country, we will be present aggressively, and we will be present aggressively in, I don't know, 50 districts around the country, where at the rural level we will have a pretty well-established branch infrastructure. That branch infrastructure will be much lower cost. Both sets of branch infrastructure will be lower cost than existing branch infrastructure of other banks. It's the design of the branch that can be very different now. There's been so much learning about back office versus front office. There's been so much progress on how you manage work process flow, how you manage data centers, how do you manage centralized processing. It means the number of people that you need per branch, even in the top centers in this country, is actually much lower than what legacy banks have.
How much lower?
I'd say 30% lower.
Okay.
That's very significant.
And you have to be present in a heavy way in the top cities, as you pointed out, because that's where your CASA is going to come from.
Account.
If I was to kite fly, for instance, Hindustan Unilever has some 40,000-50,000 strong Shakti. Looks like you've already been there.
Yeah, so we've examined all of that,
Which cat did I hit now?
No, so those are, I mean, but...
Those are obvious ideas, no? I mean, they come to anybody.
They are very hot commodities.
Yeah, I know.
So a lot of bankers are trying to do stuff
So you'll also have a big banking correspondent network, so to speak?
So the traditional banking correspondent network has not worked.
Right.
It's not been very successful at all. So we are going to experiment with new models for banking correspondence, including having our own banking correspondent, meaning floating our own banking correspondent. And we can do that in our structure. It doesn't have to be a subsidiary of the bank. We can have a banking correspondent that belongs to IDFC.
Okay, so we come to CASA then.
It's going to be tough.
Yeah, I know. Is it going to involve a price war of sorts?
Thanks to deregulation of savings rates and such like, it has become possible as part of an entry strategy to price competitively. But price alone is not going to be enough to persuade you, however meager your bank account, to move to IDFC Bank. So it really has to be about a value proposition. As a consumer of banking services, my observation is that our banks, and our private sector banks included, have created a bank infrastructure, a branch infrastructure that seems to fall between two stools, right? It is very uniform. It's too uniform, right? Across the country, across all customer segments, such that it is too high cost and intimidating for the base of the pyramid, and really doesn't cut it for people who are looking for greater convenience. So people like yourself, I'm assuming, really don't have time or any interest in going into a bank branch. So our challenge really is to connect with you. What convenience must I offer you so that you start banking with IDFC? And I believe that we actually have an opportunity, because again, it goes back to the point we were discussing earlier about legacy, right? So existing banks have, whatever, right or wrong, they've now invested in this approach.
Right.
Incrementally they can change it, but it's going to take them a long time. I can come along and offer a quote-unquote different value proposition to you that hopefully you will find more convenient, that relates to your lack of interest in going to a branch.
No, I agree with you. In fact, Rajiv, I think most banks should envy you, because you guys are getting into the space at a time when technology is changing everything, right? So you don't have to sit with the old-fashioned ideas of branch banking. Branch banking is virtually dead, I'd say, right? You can talk about mobile banking as being your big thrust. I don't know how well it would, it's working in a country like ours as yet,
but at the very
we'll
least,
get there.
But at the very least, we have to invest in and experiment aggressively with alternative channels.
And you're doing all of that now.
We are doing all of that now.
But all cats in the bag that you don't want to take out. So I think then my final question is for those investors who are watching this transition of yours from IDFC, the infrastructure financing company, to the bank, they're going to have to be very patient for the next 5, 6, 7 years. And the reason why I ask you this is, for instance, a report that I was reading says, and this is Macquarie, that says that it doesn't see, you've seen that report, right? It says it doesn't see
He finds IDFC very boring, right?
Well, no, he said it's a painful journey ahead, but I'm sure you'll agree with that. It is going to be painful.
Yeah, I mean, so everything is relative.
Okay, so but let me put to you what they've said. They've said that they don't see ROEs at IDFC even crossing cost of equity of 13 to 14% by FY 2020.
Theoretical concept.
Let me finish. I'll just finish
the equity.
Yeah, by FY 2020, it says that ROEs could drop as low as 6.8% in FY 16 and FY 17 before they then recover slowly to 7% and thereof upwards. Would that be...
So this gentleman has the luxury of never having worked in a bank. He's just a theoretician that sits on a desk, writes reports, and he finds actual, working, creating something boring. It is absolutely true that there will be a decline in ROE, which will be temporary. I think that is inevitable, because we have to build, we have to invest in building out the bank. But it is equally absolutely true that this investment is going to be a compelling investment, because over time the return to that investment will be very significant. And the reason for that goes back to very fundamental opportunity. At the risk of repeating myself, we have no legacy. We have no technology systems that we are wedded to. We have only under 600 employees. We have no branch infrastructure. And we will have more than 12,000 crores of capital to invest in building a franchise in an environment where public sector banks still remain hobbled by their traditional challenges, and the new private sector banks are now wedded to systems and cost structures that make them less nimble to attack the next stage of the opportunity, that is Indian financial services. Now this will take 5 years, 6 years, 7 years to build, whatever it takes to build. But building a new franchise in Indian financial services, long run, is an extremely valuable opportunity.
I know I said that was the last question, but I forgot to ask you another question earlier. You said that you're not looking to acquire a branch network, that you'd rather build out organically. So should we say that you've ruled out any inorganic route of building out your branch network?
No, never rule out anything. But
the chances are slim.
Chances are slim. If a lot of our strategic sense for what will work and what will make us successful relies on a different way of doing things that significantly reduces cost and a radically different technology platform and different way of architecting the branch infrastructure, etc., if you make an acquisition that comes with so much baggage,
it doesn't fit into the strategy.
It becomes challenging. So if you could buy assets, or you could buy branches without acquiring the whole caboodle, that would be ideal, but that's not on offer. Okay. So that's what makes inorganic growth challenging.
Okay, so you don't have the people as yet.
Yeah.
You don't have the technology as yet.
Yeah.
And you don't have the branches as yet.
Right.
All of these I would have thought were challenges, but since you've made them sound like opportunities, I'll end there, Rajiv. Thank you so much for your time. We'll come back in a quarter or two when you're ready to talk about your plans, in some more detail, depending on where we are then.
Thank you
for your time.
Thank
Thanks.
you.